Hey everyone, Mortgage Nerd here. So I want to talk to you today about mortgage applications. We see a lot in the news that they're like, mortgage applications are plummeting, they're falling off a cliff, it's the beginning of a crash. So of course I started to research myself. I was like, let me start looking at the mortgage applications. What's happened over the last 2 weeks, especially because after the last inflation news, the CPI data came out a couple weeks ago, the mortgage rates really did jump up. And it scared me because there were a couple days there that were really bad, some of the worst days in a decade, blah, blah, blah. So I found this chart here, and it talks about how mortgage applications actually rose the week of June 5th to the 10th. That's a little deceiving now because it was the week after that we had the news of the CPI data, which caused rates to go up. So I have no doubt that mortgage applications have dropped since then. But I tried to find, all right, let me look at all these different comparisons, find what this can give me longer term, whatever. I didn't find what I was looking for. So I dug deeper and I found this awesome article. So here we go. This article from Mortgage News Daily shows us a correlation, composite index versus the 30-year fixed. So the composite index is mortgage applications. And so that's this line in the back. This is the mortgage applications falling off a cliff, right? And the mortgage rates skyrocketing. Yeah, that's all mortgage applications. So I dig deeper. Let's look at what happened with refinances. Just refinances, not purchases. So refinances, of course, when rates were at their highest most recently, at the end of 2018, mortgage applications were at their lowest. Then, of course, what happens when we reach the lockdowns, March of 2020? Look at the skyrocket in mortgage applications as rates were coming down, hit their lowest point here towards the end of 2020. All of 2021, we stayed pretty sideways. But look, even here, mortgage applications were already coming down. Why? Because everybody refinanced. I mean, a ton of people refinanced, so they were already on this landslide, and rates hadn't even started going up yet. The end of last year, rates really started going up the beginning of 2022. Here we are, January 3rd. That was D-Day. That's the day that has really hurt the mortgage industry. Yeah, I've lost a lot of business. Not that I lost it, but I have less business because people aren't refinancing. Oh well, I knew this was coming. So rates have skyrocketed since, and those mortgage applications have only continued to drop. But here's what we really need to look at. What happened with the purchase applications? Let's just start right here where rates were at their lowest point, 2021 going into 2022. Yeah, mortgage applications were much higher. Rates went up. We see mortgage applications for purchases drop. Then they came up. Then they're kind of sideways. Yeah, they've dropped. No doubt they're dropping, but they're not falling off a cliff. It's not doomsday. There's no correction coming. There's no crash coming. There is a rebalancing of the market. We cannot have this tiny supply and huge demand. We need to lower that demand and increase the supply. We need balance in the market. We need for houses to sit on the market for 2 and 3 months, not 2 and 3 weeks. This will bring a more balanced market, a market that's easier for buyers to come back in when rates get lower and be able to buy a property without having to bid against cash-only offers. That's the market we're heading towards. We're not heading towards anything like a 2008 market. The media loves to use mortgage applications as an indicator. Come on, guys. You got to look at really what matters, which is the purchase mortgage applications. Mortgage Nerd out.